Intuitive surgical designs, manufacturing and the marketing of the Vinci robotic surgical systems.
Exactly, invented in the 1980s in California and taken commercial. Robotic surgery, this is the machines that the high-end doctors use to do procedures that the human fingers are not
So they don't
accurate
ultimately
enough.
replace doctors.
No, part of it is robotic surgery where the guy is here and the patient is actually, you know, in Iraq in a medical tent. But the other part of it is just the machine that works on the person while the doctor is sitting off to one side.
Market cap here, $25.5 billion, price to earnings ratio of 38.3, no dividend yield. So this one is set for growth into the future. Do you think it's going to hit the nail on the head?
Yes, a great track record of growth, and it seems like that will continue. They got FDA approval for the Vinci machine a few years back, and that really propelled them in the US and internationally to distribute the machine for doctors having the comfort to use it, that it is safe. And then secondly, they follow a razor and blade model where they sell the machine, but every time there's an operation, a procedure, there are consumables being used. And the consumables are really the high margin products. So they make both money in selling new Vinci machines, and then they make even more money by selling the consumables on the back of that.
Paul, are you invested or have you been invested?
No, I don't really know too much about this company other than it sort of bumbled around and was one of those that people talk about in this group. So that's why we added them to the list.
Can we look at the share price graph before we go?
Yeah, that looks
further?
handsome. All of these share charts look pretty good. They all look pretty good. This one perhaps not quite as hot as the rest, but it certainly hasn't done badly because that's quite a big move if you look at the numbers on the right-hand side.
Relatively expensive, though, given their price to earnings ratio.
Yes, but you get more growth for that. So if you think about the annuity model, every time they sell a machine, for years after that, they have procedures and therefore the selling of these consumables. So at the moment, they've got about 3,800 machines out there. They do about 650,000 procedures every year. So that's just under 200 procedures per machine per year. And as they continue building out this base of installed machines,
You can't
that
argue
annuity
with
income
annuity
just falls to
income.
the
It
bottom
sounds like
line.
a very robust model.
Exactly.
What kind of cost do these machines have and which kind of hospitals have them? Like, would you be finding them in the hospitals around here in South Africa?
I think we have a handful. I remember the distributor locally mentioned that they sold a machine 3 years back, Lita Healthcare. So we probably have 1, 2, 3 machines in South Africa, I would guess. And you make the costs involved are the machine itself, the maintenance contract, and then the buying of the consumables.
Because the trend is really, you know, in the old days, an orthopedic surgeon used to go at you with a hammer and a chisel and a hacksaw. And it used to take like 6 months to recover. Nowadays, it's all keyhole surgery done by these machines. You're out of there and you're walking within 3 days. So
This
you can
sounds like
understand.
a perfect model for you if you combine the technology and your love for medical devices.
Indeed, I just think the sky's the limit for these companies because the trends we're seeing now are going to be the trends into the future, particularly. So the medical insurance pushback and the cost is a bit of a concern, but I think people want to spend money on this stuff.
Is this one to put in your portfolio in the hope that it's going to shoot the lights out down the line?
So it's basically a one-product company, which also always comes with significant risk. But they bought out their biggest competitor 7 to 10 years ago, and since then really propelled
Was that the
forward.
company that was always giving them a hard time
Yes,
legally?
they were
I
in
forget its
litigation
name,
with
but
them,
they
yeah,
always like
computer
they said,
something.
no, you didn't invent that, we did. And then
Correct.
they said, okay, well,
so
that's
post that, it's in a very strong position. They obviously still have patents, and the question is how can they defend the position with the likes of Stryker also coming now with robotics.
But you don't like the single product
I'm
exposure.
cautious about it, but I think that the annuity model is strong enough, and when it comes to medical devices, the strength of a brand is important. No one's going to buy the no-name brand. No doctor's going to do that to then.
No patient is going to
Exactly.
opt for a
So I
no-name
would say,
brand.
based on their position in the industry and their competitive advantage, it is hot.
It's hot. Paul?
Yeah, I'll go with hot as well on that.